How do you believe the shares trade off the back of this news?
Well, we've already seen Southern Cross Media shares up a massive 32% in the month of February. It's one of the best performers in the ASX 200, and it is on the back of speculation that we will see Southern Cross Media see corporate activity become a possible takeover target from either 9, 7 or 10. So those rumours are around, and they have helped to support the share price of Southern Cross Media. If we have a look at its assets, its regional media assets are some of the most attractive assets on the market. So Southern Cross Media expecting to see some support for its share price continue. It has been one of the best performers in the month of February, and that share price rise expecting to continue on the back of expectations around some corporate activity.
Julia, the fact that personal income month on month worst in 2 decades for US consumers, notwithstanding that tick up in consumer sentiment, how do you get your head around that?
I guess if we have a look at the US market, it has been running quite hard, and generally overall the US data has been improving. We've seen an improvement in terms of consumer sentiment. We've seen an improvement in terms of the residential housing side of things. So altogether, I don't think the markets are too concerned. We've seen so many problems over the last few years, and politicians coming to a last-minute deal to sort of save and kick up the economy. I guess here domestically, we're going to see a lot of numbers that we'll be concentrating on as well. Today, we'll get a read on the ANZ job ads, and this is seen as a precursor or a forward-looking indicator for the jobs market here in Australia. And this is an important one because it gives us an idea of where interest rates may be headed. We know that the Reserve Bank may be on hold to watch the effects of the 2 last interest rate cuts that they had in October and December before making another move. But if we continue to see softer than expected numbers coming out of that employment job space here in Australia, then we could see the Reserve Bank move a little bit early.
Ramping up production at its gold project in WA, triggering this maiden profit, the investor reaction fairly lukewarm, to say the least.
I think it's a hard day for Sandfire to come out with a maiden profit, and that's because we've seen copper prices down by 1.5% at a 3-month low on Friday. So we are going to see that material space coming under pressure today. Sandfire coming out with a maiden profit, $74.1 million. Now you have to remember that Sandfire shares have been under a fair bit of pressure over the last year. We've seen the shares down by 19%, but that's because copper prices have been under pressure, and we've seen copper prices falling 11% in that time. Now Sandfire is an emerging copper producer. It owns 100% of the DeGrussa project. And if we have a look at this DeGrussa copper and gold project, in the 4th quarter of the year, we did see a commissioning of the concentrator, a ramp up of its operations. If we have a look at Sandfire, though, nothing much has changed. It's kept to its full-year forecast, so it's still predicting 67 to 71,000 tonnes of copper and then 49,000 ounces of gold. So no changes in terms of the forecast, but it's going to be a really difficult day for our material companies. We did see copper prices down by 1.5%. Oil prices were down by 1.5%, now negative for the year. And of course, we see the biggest stock in our market and the biggest one in the material space, BHP Billiton, trading ex-dividend today.